Today's date is 8/13 of 19, and it's an evening setup. So we want to go back over here on this date, which was on 7/29 when we were calling for this correction and that things would happen. And then you come right through here, all the way down, right to this very tip today, and it comes right here to this horizontal trend line. Now, off of the bottom on 8/5, we come, this is when we put that bottom in, and there was another bottom here, but we come straight right through here, comes right through there, and then it arrow lands right here. Now, let me just tell you about something. This morning, futures were down, everything was down. Then there was a headline event. This is a 60-minute chart. This is a 60-minute bar, but it all happened in about 15 minutes. Once it started to go, it just kept going. But now we're testing this major resistance level here where we had that last reversal. And as of right now, the 60-minute volatility, as you can see exactly how we consolidated right here. So once the short sellers had to try to get out of the market, what ended up happening is the algorithmic high-frequency trading technologies, they took the headline event from the Chinese, and Trump tweeted, oh, well, instead of September 1 on tariffs, we're going to move it to December 15th. And that is where this happened. So it happened very quickly, and this is what happens with these algorithms, and this is how this volatility is created. So they actually popped it right up here. Once they got it up there and they hit this trend line where this reversal was going down over here, you can clearly see that arrow now is right there, but it did not give up any more gains. Basically, it was a machine-driven event, machines that use these algos, and they do it very quickly and very fast. As far as the call side of the market goes, we did not chase certain stocks that when that 60-minute bar happened, then the put side of the market went way down. Unfortunately, because of that, a lot of the calls on the call side of the market at various different strike prices, they got up very high. And once those calls got up there very high, because it all happened within, let's say, 4 minutes, you can't chase the highs, and you can't. So when we look at a lot of the call charts right now on different ones that we trade every day, they also did not pull back. The call side stayed up here just like that. So there it is on the S&P. Right now, we would say that this volatility is at a crucial point. We have a lot of things going on. 1 minute we get one tweet, and, then everything caved in. And then you get Trump coming out, oh, well, instead of September 1, let's go ahead and put a lot of that off until August 15th. We don't see no deal coming out of China. And, when Trump did his little tweets about raising the tariffs September 1, now we come out with another headline. And this is how high-frequency algorithmic algos work by using a machine that does the buys on it. It's not humans who did that. So the short sellers came out. Nothing has changed except the volatility. The upside volatility is going to be there, and we keep telling people that. But being very disciplined that from a algorithmic move is you have to be very disciplined, and you can't chase these prices when something like this happens. It never does have a good outcome. So I will be drawing some other trend lines in the morning. I'll go ahead and put one on here right now. Just remember one thing, the volatility is going to stay here. So we're going to come down to this trend line right here, which was support back on 731. And it broke down right here on 8-1. And then that was it. These were the gap downs. These were the events to come off of the bottom. This trend line down here is where we held that support. And the markets were selling off until that tweet came out. And then at that point in time, short sellers that are short the S&P, they had to buy to cover. So now you got a machine-driven event, and then you got people that when it goes up, that trade on the put side of the S&P, well, they lose value, and they do. So they had to come out, and that's the best way to explain this to you so that you have a clear understanding of what's going on in this volatility. And let me just say another thing. This is the month of August. Now, generally, September is when you're going to see the bigger pullbacks, but they started right away. That was because of Trump and a lot of other things that are happening around the world in Hong Kong and whatnot. But as it stands right now, we're going to take a look and see exactly where we test that major resistance level. And then the reversal volatility will come into play. Just protect yourselves. People are selling into the rally no matter what. So nothing has changed as far as that sentiment goes and how people feel about these markets.